John Piper with the weekend video, and it's Saturday the 9th of May. Starting with the Dow this morning, we have this big ABC decline triggered by the virus. We now have this, what I think is probably an A, B, and an ABC, and you notice that the angle of trajectory is getting sort of weaker and weaker as it goes up, which I think is not a positive sign. I think what's happening is, the market sort of wants to be short, but too many people are going in getting short, and that's driving the market up. The market basically will do what the majority don't want it to do, because if everybody's short, there's nobody left to sell, so it's got to go up. Similarly, if everybody is long, then nobody left to buy it to go down. So I think what's happening is it's just being difficult. I've been selling the market the last few days. Actually managed to make a bit of money because I'm quite careful the way I do this, even though the trend's actually up at the moment. So let's have a look at the action since here in a bit more detail. So we saw a pretty impulsive decline here, which may be a wave one, followed by an A, B, and C. It's just gone above the A equals C level at 24,370. The high was around 24415. One other factor is we have options expiry next Friday. Often the bigger moves come in after expiry, and this is because new positions are being created, whereas the expiry week is a sort of balancing act. These things aren't mandatory, but we do often see big falls after expiry. It doesn't mean we can't see the beginnings of a fall. So I'm basically staying with my short stance here. I'm looking to sell the market in layers, so I'll just take a small position to start with. That goes into profit, I'll then add to it and continue that process. So that worked pretty well in this move here. Not so well in this move here, but so I ended up on it, so it was okay. I'll do the same again next week if that's what we see, but as I say, it is expiry week, so generally the expiry period is a little bit more sideways as the people balance their positions, and then we get the faster action when they start open new positions after expiry. These are option positions I'm talking about because it's the options that expire, but it affects the entire market because it's a big issue. So my expectation is that we're going to go down in another leg. Whether it'll be a huge wave down, I don't know. It's I think possible because the way this pandemic is being handled. I'm not sure it really is a pandemic, but that's for another day. I think it's doing more damage. Certainly the reports coming in seem to suggest that starvation is actually now a real issue for some people down the road. Anyway, it's not good, but I would expect us to go down, but markets do what they want to do, as we well know. So similar on the DAX, we've got 5 waves down, that's pretty clear, and a pretty feeble ABC here. Which has just about managed, and it hasn't quite managed to get up to the 60-day level, which waves too often do. So the same position really, I'm expecting a reversal, but and in fact, in terms of both time and price, this A wave and this C wave are pretty damn similar. So we might well see the peak next week and a sell-off, but only accelerating once expiry is out of the way. Additional on FTSE, again very similar patterns, 5 waves down. Bit of variation, but basically the same. ABC, A, B, Dithery C. Often the C's are 5 wave, you've got 3 at the moment, but we're in the 50% to 61% levels, and A is approximately equal to C. You can do the maths yourselves. It's always a good exercise to do things yourselves. Again, same basic issues. Right, gold is having real issues with the 1720 odd level, 1720, 1722, keeps falling back. We had a sort of pretty good 5 there, A, B, C down to there. Another 5 here, 1, 2, 3, 4, 5, and down we go again on a very sharp ABC. Evel Knievel, in one of his reports, he does about 2 or 3 a week from Master Investor, mentioned that the June expiry, I think it's the 20th, it's in Google, if you Google gold June expiry, that people will be seeking to take delivery of their gold, and as there's a shortage of physical gold, that should push the price up to €2,000, $2,000, But that's Evil's calculation, not mine. I'm just reporting what he said. Very experienced trader, so I do tend to listen to him. And I think the reports are free. It's worth turning up to Evil's reports on Master Investor. We're back at the 1700 level now. We have got the 5 and we have got the 3. So yet again, it may be a case we're going up. But looking at the action since the May low here, we have got an A, B, C. So a little bit open, but say there is that possibility at the June expiry. Right, Bitcoin. I did issue a cautionary note on Bitcoin in the WhatsApp rooms yesterday. Markets, or all markets, exercise this this pull and push, as it were. As the market goes up, it exercises a pull to try and drag people into the market and buy it. Bitcoin, we've got the halvening, which I think is this coming week. We've got the 10,000 level. We've got the expectation from some quarters, including myself, move by 20,000. It's a fairly potent mix to drag people into the market, and you see the market going up, and you're liable to be dragged into that. But the chart, the wave pattern is such that at the moment, 1, 2, 3, 4, we've got a 1, 2, 1, 2, 3, triangular 4, 5 to end 3. We're now going down in what I think is 4 of 5. And I think we've got one more rally, but I'm not sure it's going to take to get as much above 10,000. I think that may be a barrier until we fall back in a wave 2. So we may get some much better price. Personally, I'll probably buy this, depending how low we go, because the subsequent rally might be more stronger than I'm expecting. One doesn't expect to get the markets right every time, obviously. But the chart, what Elliott does is it takes the emotion out of the analysis to a large extent, so you can see what the market is telling you in a non-emotional way. But at the same time, you've got this always this emotional pull, both for buying as markets go up and selling as markets go down. And it's just important to be aware of that. And the stronger it gets, the more you want to be doing the opposite. So if you're feeling it's a really strong pull, I was, and I know some of my clients were, to buy around this level, that's something you really have to think twice about, because it's when you feel that emotional pull that you know that the majority of traders feel the same, and that means that they're probably all positioned, and then who's left to buy. So it's important to keep that emotional channel open to get a feel for what's going on. So look at the shorter term action. So we blipped above 10,000. I was around 10,080. Eminently correct looking form. A, B, C may not be over yet, but so I'm expecting another rally to complete this pattern. In fact, the next rally up should be the last in the sequence. But as I said, it's probably worth buying. If you see an obvious low, have a decent low risk opportunity, I would tend to go in, buy the market just in case this thing shoots up faster than I expect. As long as it's low risk, then it's okay in my book. Ethereum is similar. We have this 1, 2, rather flattish 3, 4, 5. That could be a wave 1. So look at the action since. Alright, so from the peak we have a ABC, A wave, ABC, B wave. The suggestion here is we're going to see a C wave decline here. It's actually possible. This is a 5 wave form. This is a 1, 2, 1, 2. We're going up from here, but it overly looks corrective rather than impulsive. So for the time being, I think one more sell-off is more likely on Ethereum. Right, that's all for today. If you find it useful, back to report subscribers on Tuesday. Have a great weekend. Thanks for listening, and bye for now.